Welcome, everyone, to Ask Me Anything IT. My name is Carl Polachuk. I'm an author, a speaker, and a coach. We're trying a new format today, getting away from the cookie cutter webinar. I welcome all your feedback. You can email me at carlp@smallbizthoughts.com, although I won't be checking email during this program. We are taking questions on the Zoom platform, so if you want to join the Zoom, head over to mspwebinar.com and register there. We have received questions from members of the Small Biz Thoughts technology community, and those will be asked first. But we continue to take your questions live, so start typing now. We will run out of time, I promise you. First, we're going to bring up M&A coach James Kernan to ask him questions about the details of selling a business. Our goal is to dig into the stuff you won't hear at every conference and show. Second, we're going to bring managed service provider and enrolled agent Rayanne Buchianico to the stage along with James, and the two of them are going to answer questions together. And finally, we'll let Rayanne have the final segment all about the hard questions, the financial questions that come up after the sale. You know, the effects of taxes, multiple payments, dealing with the banks, and all that. Our goal is to provide you with truly valuable, honest information that you're not going to find anywhere else. That's a big promise, so let's get going. For the last 20 years, James Kernan has served as the principal at Kernan Consulting and provides coaching, advising, and mentoring programs to entrepreneurs and leaders. Kernan Consulting offers M&A broker services for both the buy and sell sides, one-on-one coaching, CEO mastermind groups, and valuations. For more information on the company, please visit kernanconsulting.com. I'm always happy to work with James. He teaches several classes for us at IT Service Provider University, including a 5-week course on mergers and acquisitions for MSPs. So the first question, sent in a question from the Small Biz Thoughts technology community. And his question is, I'm a one-person shop and I've been providing break-fix support services for 20 years. I've learned that having contracts will increase the value of my business. What's the best way to structure the contract to only include services, but any labor would still be billed on a break-fix rate? In other words, he wants to bundle antivirus, spam filtering, all that, but have all the labor be outside of the quote-unquote managed service contract. That's a different way of looking at managed services from me, but
yeah.
What do you think?
So first of all, congratulations for being in business for over 20 years. That's good news. So remember, the primary objective with all contracts is you want maximum MRR. So the higher the MRR, the bigger the contract, the more valuable things will be. So I want to encourage you to maybe think about averaging out the time that it had taken you historically to do the work month over month, year over year on these customers, and consider adding that to your agreement. And then anything above and beyond that, maybe you bill hourly. If you just want just the product and the services that you're doing, not including your labor, I would just do a cost plus, add tons of margin in the product side, and then have a fixed fee billed at 15-minute increments. But it's a lot more labor intensive that way if you do it, and the contract value is going to be a lot lower if you do it that way. A lot of people still do that. That's okay, but those are a couple of quick recommendations.
So somewhat related to that, I was on a call with one of our community members recently, and he's got, I think he said it was about $5 million in revenue, but he does no labor included in his flat fee contracts. And so he's built up a huge, I guess what you'd call mostly break fix, although he does exactly what this person does, which is to have, a lot of the goods and services bundled, but the labor separate. Does that mean obviously he's got a good business, he's clearly very profitable, but he could dramatically improve his sale price if he somehow managed to get that labor inside of the recurring revenue portion?
Yeah, I would look at it that way to see if you could add the labor inside it. I mean, that's the whole premise behind managed services. You take all the services that you do, you kind of factor out labor that you would do per seat per month, maybe pad it a little bit. to get to your monthly number. I mean, that's really what most people try to do. So I've seen small shops and big shops do it that way. It's just very labor intensive, adding up all the hours that you do every single month and then billing that out. It's another form of monthly recurring revenue. So, the value is still there overall, but it makes it a lot easier to sell. The higher the contract value, the longer the term, in good, clean contracts if you have them in place.
Right. All right. Next question. How can I figure out what my company is worth without contracts versus my company with contracts? So I don't know a lot of people who don't have contracts today, but apparently it's still pretty common.
Yeah, it is. It is common, Carl. You're exactly right. That's a great question. I've just had two instances just this year that earlier this year I was contacted by one man bands, maybe 14, 15K MRR, 200 to 250 top line revenue year over year, the last 3 years in a row. And, in those instances, one of those two customers didn't have contracts at all. He just had a billing understanding of here's what I would do. The other one actually had a contract in place many moons ago, but they theoretically auto renewed and he never kept up on them. So he had to kind of dig those out of the archives. In both scenarios, both businesses sold for about $250,000, which was shocking to me. It was over my valuation. So don't get too hung up on the contracts. I would just say most of the time, good contracts in place increase the value of your business, but not all the time. And what I mean by that is it certainly makes it a lot easier for a broker for me to market and sell the business if you've got contracts in place. But on the flip side, I could go back and argue. I go, look at the P&L for the last 5 years. It's pretty stable. You've got all these same customers. We could show here's the monthly recurring revenue year over the lifetime of their billing relationship. So that's how I would argue that one with another broker or a potential buyer. But I would just say in all instances, try to get contracts in place if you could. It does make it a lot easier to sell and doesn't necessarily increase the value that much, especially for a smaller practice. But, you know, just to be clear, I still think it's a good idea for you to get contracts in place.
Yeah, well, and it's probably a separate discussion, but if somebody's got a bunch of contracts that they signed a long time ago and then they lost them or they they misfiled or they've been auto renewing for 10 years, I'd look to make sure those contracts are still good and exactly what you need and whatever. But if nothing else, I'd make sure everybody's got a copy of them. So that's
Yes.
probably worth digging up. Okay, question from the Zoom feed. With higher interest rates, how is that impacting the private equity MSP buyers?
Hmm. Well, some of them have a lot of cash on hand, and they're just kind of sitting on the sidelines looking for a good deal. So they'll use their own cash, their own investments to finance a deal. There's more and more seller finance going on. So, when you think of people getting a loan or using their own funds, keep in mind, part of it's a deposit up front, that down payment. And then a lot of time you could self-fund, or really the seller is financing the note over a period of time. So you could factor that in. I see more and more people doing that type of thing as well. Just real quick, a real quick observation, Carl. I would have guessed that the higher interest rates would have slowed down the M&A activity for the little guys. And I'm saying 500K to 5 million, but it's really, really busy. The activity's stronger than I've ever seen it. So the interest rates aren't slowing anything down.
I think I refer to it as us being in an M&A frenzy. There's people who are like grasping, like, oh, we've gobbled up all the little guys now, like there's nothing left. It's almost like a pyramid scheme. Like we got to go find more little guys to pump into the bottom and make them as big as possible. And it kind of reminds me of the real estate bubble where you had people who were like, hey, we have to sell at the highest price possible so we can maximize our commission. And then we got to buy at the highest rate possible so we can maximize our commission on the other side. And so they're like pumping it all up. And it's a great time to be selling. I'm not sure it's a great time to be in the business in general. But is it a bubble? Is it all going to pop soon or not soon?
I mean, there's a lot. I'm just seeing a ton more activity happening at the small MSP side. Just the example I gave a moment ago of the two little MSPs, one man bands, they both worked out of their houses. Okay. They've done it for 20 years. Then they turn right around with 14, 15K MRR. Most of the time, people think that's worth 100 grand. It's worth 2X that. So, and back to your comment about private equity, I was on stage speaking at an M&A event just a year ago. Okay. So 2024. I was the only one on stage talking about my market is a million to 5 million. That's my sweet spot. Most of the transactions I'm involved with is in that space. Every single other speaker that represented, private equity money they were all saying 10 million plus, 10 million plus, 10 million plus. That's not the case today. They're all swimming downstream and they're looking at the little guys all the way down to a million. I'm contacted all the time from those folks. So it's back to your comment of it being a good time to sell. It's a great time to sell. I would look at that for sure.
It's 10 years too early. Next question. Is AI impacting the private equity MSP buyers? Are they rolling AI solutions into the companies they buy? Um, so, have you seen any effects of the AI in this?
Around the process itself, but what I am seeing is people, you always want to understand the narrative. What's the story? What if you want to come in and buy this business, what's going to happen to my baby that I've had for 20 years? Everybody wants to hear, that you're going to care and coddle and grow and take care of the employees, take good care of the customers. Normally you want to say things like, hey, we're going to keep the prices the same, we're going to offer faster service, we've got more services available, we're going to try to operate under the same contract terms. The more you change when you acquire another business, it creates change and disruption, and you're likely to lose those clients. But I think the narrative of being able to bundle more services together, I'm seeing more and more AI offerings being bundled in with these bigger entities buying the smaller MSPs, for sure. That's one of their primary service offerings, and it's really like a big MSP that's AI driven or AI trained. So yeah, I'm seeing it absolutely this year.
What would your advice be to MSPs who don't currently have a lot of automation or AI focused automation in their business? Should they just figure out how to do it?
Keep playing around with AI. You really want to kind of use yourself as a guinea pig and really focus on two areas. Number one, of course, you want to understand what AI can do for your business. It economies of scale. You can be more efficient, more effective. Just using AI in my business, I've trained my virtual assistant. I've gone through a lot of training myself, producing content, helping me refine things. I don't use it to do my job. I use it to make me better and more efficient, faster. So those are things I would encourage you. So look at it to understand that part of it. The other thing is on the back end, we're all in business to protect people's data, right? And consult with them. Everybody's doing research right now. I think the last survey I saw, 94% of CIOs, CTOs out there have an initiative this year in 2025 to implement more AI in the business. You MSPs need to be the thought leaders going into these customers, talking to them about AI. And if you don't know it yourself, one, about what it can do, and two, how to protect that data, that's a problem. So I think it's a huge opportunity. I think you should start with yourself being the guinea pig, kind of learn how to use it, have your team go through training and tinker around, play with it, but leverage it as a differentiator in your business. The traditional days of the MSP, of us just, charging $100, $150 a seat to manage someone's network. I mean, there's limited time before that is going to expire. And I think leveraging AI in your business is a great way to look at new revenue streams and differentiate yourself from the legacy competitors.
So this is a bit of a follow-up question from Steve. Is AI impacting EBITDA, earnings before interest, taxes, dividends, and amortization, and thus valuations or multiples?
Hmm. I've I've not seen it that way, but because I haven't represented a business that is, an AI focused business, what I will say is, like, if I'm representing a break fix company, a cabling company, their multiple is going to be a lot lower because it's not very sexy. If it's a cloud hosting, high annual recurring revenue, cybersecurity, business process optimization, AI is hot. So normally those multiples are a little higher. Now I've not been involved in that, but I can see it coming for sure. Maybe the second half of 2025.
Very good. All right, super fast because we are almost done with this segment. But super fast. David says, "I'm seeking to buy an MSP. Can someone put me in touch with any of these MSP resales?" Any comments for him before we go to break?
I mean, you could reach out to Rayanne's practice. You could reach out to my practice. If you want to buy something, the best time to buy is when you're the only person at the table negotiating. If it goes to market and a broker has it and they're marketing it out there, I mean, you're sitting in the stands with 100 other people looking at the same thing. So I would recommend being represented by someone that you could go target an opportunity, or be someone at the table early on, so you're the only one there. But it's getting harder and harder to get a good deal out there. And again, I think that's why I'm so busy at Kernan Consulting, is because the M&A activity has just gone through the roof.
Very
So,
good.
yep.
All right. Well, you sit right there. We'll be back in 1 second with Rayanne. This program is brought to you by the Small Biz Thoughts technology community. Many MSP subscriptions offer you dozens of templates, 2 books, and a handful of trainings. The Small Biz Thoughts technology community includes dozens of books, including all of the best-selling books on managed services in all available formats, plus hundreds of hours of training and thousands of pages of downloads, including templates, calculators, standard operating procedures, checklists, and more. Plus, we're an active live community whose members get together online several times a month to share our victories and challenges, hold each other accountable, and provide a sounding board for improving your business. Everything we do is committed to making you as successful as possible. Learn more at smallbizthoughts.org. Just because you're in business for yourself doesn't mean you have to go it alone. All right. Well, Rayanne Buchianico is the owner of ABC Solutions LLC, a full-service accounting firm based in Clearwater, Florida. She works with IT professionals in the SMB market to help them optimize their financial performance, streamline their processes, and integrate their systems. Rayanne has over 25 years' experience as an accountant, business consultant, and PSA specialist. As an enrolled agent and a QuickBooks certified professional advisor, she has the credentials and the skills to provide high-quality accounting and tax services, as well as consulting on Autotask, ConnectWise, and Halo PSA software. Rayanne also teaches several of the most popular courses offered at IT Service Provider University.
Thank you very much, Carl. I'm happy to be here.
I'll let you throw in your 2 cents before we bring James back.
And I so just wanted to jump in and say, but hang on, the the SBA is still lending out money at competitive interest rates, so you don't have to go to your local bank and pay the higher interest rates. So if approved by the Small Businesses Administration, you can still fund your fund your purchase. But again, just like James was saying, a lot of those private equity companies, they bring their own cash and don't really need it.
When you are thinking about buying your business, we have always heard this, line of, and I first heard it from George Sergio, who is also in the M&A business. But I first heard this, like, run your business like you're going to sell it. But a lot of people have run for 20 years being extremely profitable why do they need to change their business at the end to take advantage of, the best sales price? Does that make sense?
I'll jump in, James. Okay. So I think before you start jumping and changing the way that you do everything in your business, just because you're getting ready to sell, there's a couple of things that you really do want to focus on. One, the business has to be able to run without you. So if you're planning your exit, start there. How can this business run without me? What do I do here? And who can do it in my place? But before you run out and make all of your customers sign contracts, understand why they are doing business with you, because many of them may be attracted to the fact that they don't have these big long contracts that they have to read and sign. You provide a service to them, and that service resonates with them, and that's why they stick with you as your customer. So before you start changing things, and maybe many of them would easily convert into a managed services if they are currently a break fix, but some of them may shy away from that, and they're afraid, like, oh, I don't need to pay for something that I'm not going to use. Um, and they don't yet see the value in that. That doesn't make that customer any less valuable to you or a potential buyer, I think.
I love the comment that Rayanne said about creating a business that can run without you. To me, that has always been so counterintuitive until I read that book from John Warlow years ago called Built to Sell. That's exactly his point in the book. And it finally, the light bulb went off for me. I've seen that, but for me, a Midwestern guy, the harder I work, the luckier I get, and the more profitable my business will be. We need to change that mindset, be more strategic, and actually, use our brains to have the business run without us, because that's what buyers want. So it just makes it more desirable that way. So good point, Rayanne. The other thing I'd say that buyers are always looking for is clean books. I run into this all the time, and nothing turns off a buyer faster than poor records in books. And I'm talking specifically financial reports. Just yesterday, I had a call with a buyer. We're going through the profit loss statements, and the chart of accounts was a mess. They had cars and trucks on there 3 times, and payment processing expense 3 different categories over a 3-year period. Those are the kinds of things that things just get miscategorized all the time. That's super common. But look at your financials as if you were a buyer, and really, they just need to be clean. They need to be accurate, and more specifically, they need to be current. A lot of times people are way behind with their financial reporting as well. So clean books are a big plus.
To deal with the due diligence side of this, I know that from both the as a broker in the case of James, and as a financial advisor in the case of Rayanne. Do you find that that's the biggest piece of getting ready to sell, is getting your finances straight so that you can actually go out and begin to have that conversation? Is that the biggest piece?
I'll chime in and just say it's a big piece. That's normally somebody wants to sell the business for a reason. Okay, they're either burned out, but normally there's other issues going on in the business. It's like, what's really going on? I always try to understand the narrative of the big picture. Well, the last 4 hires we've hired have quit. They just don't fit our culture, and I can't build out a sales and marketing program. I hear that all the time. So, you really want to kind of get your house in order, big picture, and clean things up. Books are one of them, but there might be something wrong with your culture, might be poor morale. Employees might not have had a pay increase for 5 years. I've run into that before, but you kind of need to interview the seller and really get the full story of what's going on in the business, and things that you can impact very quickly. You just get it ready for sale, and put a smile on your face and get on with it.
Rayanne?
we bring on a new client, due diligence is literally everything that we do. We cannot process a tax return without doing our due diligence. When we bring on a new client, we perform a due diligence to make sure that we know everything that we need to know about this company before we begin to work with them. So, but when you are looking to sell your business, the due diligence should be done by you before you bring in that first buyer. These questions and the steps to perform a due diligence, these things are not a secret. If you want to know how ready you are to sell your business, start performing the due diligence now, right? Build your own data room, maintain it, keep your books clean. Like James was saying, as soon as he started talking about that chart of accounts, he was talking my language, right? So that the state of your financials in your business is so key. If you can't read your financial statements and understand what it's telling you, then neither can a buyer. They will look at it and say, "Oh, if their books are not in order, what is the likelihood that the rest of this company is in order?" So, actually, we have this program where you can complete this, baseline assessment to see, to determine your readiness to selling your company, and then we have a step-by-step program that will help you reach those goals to make sure that you are presenting your company in the best light you can.
When folks are looking at this, let's see. I'm trying to find the question. If you have great financial statements, that's a beautiful thing. But is that something that you can go to market and say, "Look, my financials are awesome," or is that just like table stakes, right? Like a buyer's just going to say, "Well, okay, yeah, we don't care about that. We care about other things."
Um, I want to say that looking at a decent set of books is absolutely the number one key that is going to determine whether or not the conversation even continues with that particular buyer. Again, they need to understand what they are purchasing. And if they cannot separate your recurring revenue from your projects or your products, and if they cannot determine, how much you are spending and what your gross margins are, the net number may be correct. The net profit number may be correct. Maybe it's not correct. Who knows? But the buyer is going to want to know how much in recurring revenue they can, expect, how much in gross profit margins they can expect. And I just want to say the one thing about the multiple. Everybody talks about this multiple. What is this multiple? And what it is that they are purchasing the future of the company, right? So they are paying you for the residuals that your company will provide them. They need their return on investment. Otherwise, if they have no guarantee or at least a reasonable expectation of guarantee, that multiple is going to go down.
So here's a note from an MSP buyer who says, "Can you talk to people about the operational bottlenecks that so many small MSPs have?" Apparently, that also drives down the price. What do you see operational bottlenecks when you're valuing businesses?
Yeah, there's a lot of different bottlenecks that I could talk about, but Rayanne brought up a really good point. Number one, the clean books. You need the clean books really to look at everything. The big assets people have are the recurring, the book of business. You're buying the book of business, so you want clean contracts, big dollar amounts, long-term contracts, make it more valuable and easier to sell. The people are really, really important. And this is the hardest part of due diligence. How do you really evaluate people's culture? Most of the time you're not allowed to go in there and talk to people until the very end of a transaction. But as a broker, that's hard. I have a little bit different window into those things. But I like looking at the people. Buyers want strong leadership teams. They want strong engineers. They want strong salespeople. They just want a good team, and people are one of the most important assets. And that's where I would see a lot of the bottlenecks. Maybe the the ticket count is just out of control and the help desk is way behind, the KPIs, but all those things, to me, the bottlenecks, I would typically see that on scorecards or financial statements, that there's issues with that if they've got a handle on their numbers. But those are types of things that you want to look at as well. And a lot of times the bottlenecks I've found are the owner. And it's very common, you still have the owner sitting there approving every single invoice that goes out the door. It's like, what are you doing that for? Again, it just makes it less desirable. You should be cross-training other people to be doing that, because when you sell the business, obviously you're not going to be there doing it. So I would offload that as fast as you can.
All right, Rayanne, what do you think?
Yeah, the people in the organization are so important, right? Because especially if you are, looking to sell your business and somebody's coming in to buy your business, they want to know that there will be somebody that shows up, at 8:00 in the morning on Monday when they now own it. So the people are really important. Bottlenecks are almost always at the top. For the most part, the owner, the operating owner gets in the way of true progress. But I want to say one of the things that I've run into the most is a disorganized team without clear structure, without proper documentation. Everybody's kind of doing their own thing, their own way. There is not a unified or standardized way that this company, like this is, the way we do it here. So always make sure that every time you do something new, document that this is the way we do this here. This is the way we do that here, and have the documentation so that you can pass it on. And you'd be amazed at how awesome that is at training new team members when you bring them on. So the people want to learn, the people want to do a good job at for their employer. They just need to be taught what that means.
Introduce him to me by email, because I'd be very happy to talk to him. So, sadly, that brings us to the end of this segment. I want to thank James for being with us. We will be right back with Rayanne in just a very short time. So,
great to see you, James.
Thank you all. Elevate your IT service business. Discover the power of IT Service Provider University. Owners, managers, and your entire team must go beyond technical expertise and truly master the business of IT. IT Service Provider University offers 25 5-week courses on every element of running a successful managed service business. From the service department to sales, marketing, and the front office, we'll help your entire team take your business to the next level. Every course is taught by an experienced industry leader who has been in the trenches, owned a managed service business, and learned all the lessons the hard way. The 5-week courses are designed around real-world experiences and focused on actionable information that you can use to improve your business right away. Learn more about our classes, instructors, and 5 pathways to success at itspu.com. Time and time again, I have called on Rayanne over the last 20 years because of her unique focus. I don't know of anyone else who combines her 3 greatest talents. First, she's run a successful managed service business for 20 years. Second, she's a true financial and tax expert at the highest level. And third, she's absolutely committed to the SMB IT community. It's rare to find someone who does so many things so well and always has time to help the worldwide IT community. Thank you for being here, Rayanne.
Thank you for having me here. I love this show, and I hope you have great success with it.
Our next question comes from Cameron, who says, what is a healthy profit margin buyers typically look for in an MSP or in a merger?
At a bare minimum, you probably really want to shoot for a 10% net operating profit. And I'm talking about the operating profit. Like you put your interest expense and your depreciation and amortization down below in the other expenses section and focus on that profit from operations. You want it a bare minimum of 10%. So if you're not making 10 cents on every dollar that you sell, then that's an awful lot of work for not a lot of money to take home. From there, you probably, then start shooting for the 12% net operating profit, then 15. And I have seen, oddly enough, 30% in a super lean MSP. That doesn't happen often, but quite often I do see it in the 18 to 23% range. But again, at a bare minimum, shoot for 10. And then once you get to 10, shoot for 11. And then once you get there, just keep going.
Shoot for 100%. So, all right. So early on, and Jason, thank you for your patience. Jason put in a question, and I thought, well, this is a Rayanne question, so we're going to save it for Rayanne. And this is super, super broad, but how we know there's going to be a tax impact. How do you limit the tax impact of selling your business?
Things that you can do while you are preparing your company for sale. All right. So in your company, if you are an S corporation or say a partnership, you have the ability to pull profits out of your company, and they are called profit distributions. Well, every time you take a dollar out of the company profits, you are reducing what's called your basis in the company. So if you stop pulling the profits out of the company through distributions, you can maintain a higher basis. And the higher the basis, then the lower the capital gain when you sell. There's a couple of tricks to that. Like if you're an S corporation, you may bump into something called accumulated earnings and profits. So you want to check with your tax professional to make sure that you've got that fine balance between, A and E, accumulated earnings, A, E, and P, right? And leaving enough of your retained earnings in the company to increase your basis. A couple of other things. C corporations, and this is super, super complicated. So again, check with your tax person, but there is a Section 1202 exclusion where a C corporation can sell the stock of the company and exclude the gain for qualified small business stock. So you have to qualify for these things. Like nobody's just going to hand it to you and say, "Oh, you sold a C corp today. You get, $10 million free dollars." So like that doesn't happen. But if you do the planning, it could.
Very good. All right. So Manny sends in, and not Manny, my brother, but a different Manny who's inside the Small Biz Thoughts Technology community says, I'm not ready to sell my business just yet, but I've briefly spoken to a potential buyer that's willing to buy a percentage of my business, more than 50%. So that might be a stock sale that you just were talking about. And they would handle the billing, sales, operations, help desk support, so forth. What are your thoughts on this versus continuing running my business and selling 100% when the time comes 6 or 8 years from now?
Okay. I have so many thoughts. Where do I start?
This is kind of the new thing I'm seeing is these offers, right? So is this a run towards or run away type thing, or is it just
I would immediately run away from something like that. You've worked and you've built your business, and then here comes somebody who wants to take over the operations of it, and then have the controlling ownership piece. So once you sell more than 50% of the ownership, then they can outvote you on almost every, and actually every decision that the company makes. So if you're willing to sell 51% or more of your company, sell all of it and go to work for them because you will be an employee. You also want to be careful, though. If you sell, if you're looking to sell your stock or a portion of your company and you want to be able to control what they do with it, you have to be careful about what type of entity you have. An S corporation, for instance, has one class of stock. You cannot have preferred stock and common stock in an S corporation because that's one of the rules. So if you're an S corporation, like you can sell, units, which is really not much more than a profit sharing agreement. But you don't want to break any rules and lose your S status, your S corporation status. I don't know if I answered your question. I hope I did.
Well, so I think the big message you got across is very good. Be very, very cautious. Maybe run away from this. And I love the message that if you got 49% ownership, that's kind of like having 0% of leadership. Somebody else gets to make all the decisions because you're outvoted immediately. The
Right.
follow-up question is, let's assume I do sell a majority portion of my business. My decision will be based on my relationship with the buyers and how I think they're going to treat my clients. Is there a way to prevent them from selling their share of the business to someone I don't get along with, or to know that they or know that they sell it to somebody who has poor customer service?
Um, that's not so easy to do in some instances. And you're probably going to want to consult with an attorney about this. Like I was saying a minute ago, S corporations have one class of stock. So if you sell 51% of the stock in your S corporation, then they own it. They have control, and therefore they can outvote you. If they decide to sell it to somebody else or pieces of it to multiple others. If you have a partnership or a C corporation, you can have different classes of ownership. And those classes of ownership can be restricted, based on a shareholders agreement, and written into the bylaws of the corporation, that these shares, the owners of these shares have voting rights. The owners of these shares have, transferable rights, and these other shares are not transferable. So you will have a lot more control outside of an S corporation.
All right. So a bit of a follow up on some of the things that we've just talked about. Asset sale versus stock sale. Is there one that you'd rather do if you're a buyer and one you'd rather do if you're a seller, which might inform people of like, so obviously if it's better to do one or the other, that's what I should do.
So when you sell the shares of stock of your company, you are uh, you are relinquishing your shares back to the treasury of the company, and the company then sells those shares to the buyer of it. And along with that goes your name, your employer ID number, all of your liabilities, all of your assets, everything goes with it. And more times than not, buyers are not interested in your paying off your loans, paying off your debt. So they're probably more interested in buying your assets and allowing you to come clean with your creditors at the end of the transaction. Um, it, which one is better for the seller? It really depends on where that person is in their life, and are they looking to have some I don't know, great person come in and say, oh, don't you worry about a thing, here's some money, and we will just take care of all of these things for you. You just go on and retire and have a nice life. And that just generally doesn't happen. So we want to be realistic in the things that we expect from those buyers when they come in. And so for the most part, I would prepare yourself for an asset sale and also be prepared to pay off your debts at closing.
So this is the biggest, broadest question, and I had an enrolled agent, who did my taxes for 30 years, and every time I'd say, "This seems like a really simple question," he like an hour later he would like, "There are no simple questions, but, um, if somebody sells their business today, whatever, let's just say it's between 1 and 5 million, is their revenue, so it's some multiple of that. what's their tax rate? Are they going to keep 2/3 of that? Are they going to keep 7/8 of that? Is like, how does that work? And if it's completely unanswerable, just tell me so.
It's really not, and I think I can break it down for you. All right, so let's say that you buy 100 shares of AT&T stock at, I don't know, $50 a share or something, right? So that $50 per share times that 100 shares, that's your basis in AT&T stock. And then at some point down the road, you decide that you want to sell that stock. So you send it off to the market, and maybe you sold it at $75 per share. You bought it at 50, you sell it for 75. Now that $25 per share is going to be your gain, right? And you're going to pay capital gains tax depending on how long you've owned it, right? 18 months or less is short term, 12 months or less is short term, 12 to 18 is midterm, and over that is long term, right? So long term capital gains taxed at 20%. And the short-term capital gains, those are taxed at ordinary rates. But let's focus on the long-term capital gains. So worst case scenario, you're likely going to pay 20% to income tax or capital gains tax on the gain, right? Remember a few minutes ago, we were talking about basis. Leave your profits in the company. Don't pull them out, so that you can build up your basis, because that basis is going to end up reducing your gain at the end of the day. So 20%, yeah, and there's a couple of weird rules, but count on 20% for your long-term capital gains at the purchase price.
Oh, excellent. So now the question is, like, I don't know that I've had anybody talk about on stage anyway, maximizing your basis in order to minimize the taxes. Like, are there specific, like, two or three, like, literally we have 1 minute left. Are there super big tips of, like, okay, how do I maximize my basis to minimize my capital gains?
The best way is to stop taking those distributions and get your personal expenses out of the company. Pay personal expenses with your personal account, pay your business expenses with your business account.
All right. In other words, we're all the way back to have clean books.
Have clean books.
Very good. All right. Well, there's a billion things we didn't get to: installment payments, and what happens if somebody misses a payment, and how many things go bad. Have you seen, because I know that you've been involved with a lot of sales, have you seen things where people, like 6 and 8 months down the road, just regret the way that they went through all this?
Absolutely. I've seen buyers back out of the earnout, a year later with all sorts of excuses and reasons why, so you want to be very careful, and you want to be very clear on the terms of those earnouts should you accept those as a term. I've also seen companies go out of business after, and the seller's note becomes uncollectible. I even had one person go back and reclaim his company and pull it back, the ownership, rebuild it, and then sell it a second time.
Holy smokes. Well, so bottom line is, have a post sale financial plan. And if you need help with that, call Rayanne. All right. Thank you, Rayanne. Awesome as always. I want to thank James Kernan, who is also always awesome. You can see the contact info on the screen here for Rayanne and James. Please go ahead and make a note of that if you'd like to reach out to either of them. And of course, I want to thank Sharon Sobel from Picture This Video for being our producer. This is our first attempt at something like this, and she made us look pretty good. If you have more questions, send them to Rayanne, send them to James, send them to me. I'll be happy to pass them along. I know we just touched the tip of the iceberg, but this is a deep, deep, subject, and there's so much simplicity out there when you go to a show and you get 40 minutes on stage and they're like, oh, contact me, I'll make you a millionaire. That's not probably going to happen. I'd love to have your feedback as well. So anything you have feedback on, send me a note, as well as topics that you might want us to look at in a future Ask Me Anything IT program. As promised, we're going to give you back about 5 minutes in the hour so you can take a break before your next meeting. Thank you for being here. I appreciate it.